Hey, what's going on YouTube? We're going to go through Monster, ticker symbol MNST. Year to date, Monster is down 12.5%. Over the course of 1 year, it is down 12.5%. We're going to look through Monster's financials. We're going to also plug those financials into a valuation spreadsheet and figure out what Monster is valued at today. Then also we'll hop over to the stock chart and take a look at the technical chart pattern as well to see if today is a maybe an interesting day to buy Monster, or at least put it on a watch list. So over at Monster, they reported their Q1 earnings missed on revenue, missed on EPS. We also have analyst revisions in the last 90 days, 13 revisions lower, 2 revisions higher, and we can come down here to EPS expectations, and we can see we got some growth in Q2 expected. Also into Q3, we're looking about almost no growth at all. I mean, year over year, we do have growth, but quarter over quarter, no growth. And then Q4, they're expecting to see reduction in overall EPS growth there as well. So in their press release, Monster has repurchased approximately 1.8 million shares of its common stock during the first quarter at an average price of about $55 per share for a total amount of $97.2 million. And approximately $642 million remain for repurchase. So also what they're planning on doing is offering a Dutch auction tender, which, to be totally honest, I had no clue what that was when I read that. And basically what it is another form of share repurchasing, except what it is the shareholders get to bid for their sale of their shares. And Monster is willing to do is repurchase those shares in the range of $53 to $60. So if people are willing to sell them, Monster will buy back in that range for a maximum repurchase price of about $3 billion. So I still don't quite understand the point of this. I think why not just do a $3 billion share repurchase program? Just add to what your pre-purchase program already is. I don't know. It just I just read through this and I just got more and more confused the more I read it, and I was like, I don't understand why you do that instead of just buying back shares. But nonetheless, that's what they're doing. Back over to the financial spreadsheet. Revenue, gross profit, net income chart here. All three trending up higher nicely. Net income also just slowly grinding higher, melting up. Very nice. Gross margins, last quarter 54.1%. Looks like they're starting to get a little bit of margin back. We can see they bottomed out at about 50, topped out at about 63.7. So hopefully they can get a little bit more margin back, but still very good margin there. And over to net margins, 23.3% last quarter. So again, hopefully they can start melt back up in net margins as well. Get a little bit of that margin back, but still very good margin there as well. So return on invested capital sitting at 18.1%. Very good. PE ratio today, 31.7, historically on the lower end of where it's been traded on a PE basis. Cash to short-term debt, plenty of cash to cover short-term debts, and also cash to total debts, plenty of cash to cover its total debts as well. So very solid balance sheet right there. Then we come over here to free cash flows. Companies producing $1.45 billion in free cash flow in the trailing 12 months. Very good free cash flows over here. And then capital expenditures are growing a little bit, but still pretty nominal at $250 million annualized free cash flows. So in comparison to, capital expenditures. In comparison to free cash flows, they got plenty of free cash flow to cover their current capital expenditures. Then hop over here to share count dilution. We can see shares are slowly melting lower. They are buying back shares and not doing it aggressively, but they are slowly buying back. Over to the 10Q. We're on the balance sheet here. We got cash and cash. Well, we're on their current assets. Their cash and short-term investments combined equals about $3.55 billion in cash position. And come down here to total liabilities. We're sitting at about $1.22 billion in total liabilities here. We get to subtract off deferred revs here, about $44 million, nothing significant. But nonetheless, that leaves us with about $1.17 billion of short-term debts. And actually, really, that's basically total debts. There is a little extra debt down here as well. But for the most part, you're sitting on about $1.2 billion of total debts with over $3.5 billion in cash. So the balance sheet, nothing to complain about there. Very solid balance sheet. And then we come down to our income statement. Net sales year over year, they are growing. We got cost of sales also slightly up. Gross profit also up. Operating income also up. And then all for overall net income's also up. So everything carried down nicely throughout the income statement. As we saw over on our financial spreadsheet, margins were slightly better than they were this time last year. Let me scroll down just a little bit further, get myself out of the way. We can see our share count dilution. We went from 1.059, I believe, billion shares outstanding to 1.051 billion shares. So slight reduction in share count there year over year. And then down to our cash flows. We carry our net incomes to the top line of the cash flows. We have money flow in and out of the business here. And by the end of it, we are left with $412 million flowing into the business. We do have stock-based compensation up here, pretty nominal amount, but they are buying back shares, so nothing to be too concerned about there at all. So net cash provided by operating activities, we are sitting at $412 million. We have to minus off our capital expenditures, which leaves us about $346 million in free cash flow this quarter. And we can see down here they spent about $120 million in repurchasing common stock. And then overall, we are left with a net increase to our cash of $279 million. So we add that to our $2.3 billion of cash position prior this period. So it leaves us about $2.6 billion in a total cash position. So very good. Nothing to be worried about at all over there. Now we're going to hop over to our comps and compare Monster to Pepsi, Coca-Cola, and Celsius. When we scroll down here to our charts, we can see market cap comparison between all four companies. We got Pepsi and Coca-Cola, significant market cap lead over the other two newer companies here, Celsius and Monster, or smaller companies at least for sure. Then we come over here to growth rate. Pepsi does have growth rate. It's just not populating in, but Pepsi's growth rate is around 9 to 10%, about similar to Coca-Cola. But Monster and Celsius significantly higher growth rates for the next 5 years. Down to margins, the important part, I think. We got gross margins here, and then we have operating margins and profit margins. We can see across the board, Monster, very good margins in comparison to the competition. Coca-Cola, also very good margins for being such a well-established business. You would have thought these margins would have been squeezed a little bit more than they are, but for the most part, Coca-Cola, very good margins. Celsius, also pretty decent margins as well. And Pepsi, in my opinion, could do a lot better on their margins. They're just not as good as the competition. Down to free cash flows, we got free cash flow positive on all four businesses. Return on invested capital, very good across the board. PE ratio, Monster, not quite the cheapest, but not far from the more well-established businesses such as Pepsi and Coca-Cola, and far away from Celsius, which is trading at 62 times earnings. Over to our valuation spreadsheet calculator, figure out what this thing is worth. So, P&H valuation, $24.18. Multiples comparison between the three companies we just compared to gives us about $59.74. Price to book, 5-year average 7.6. Price to book today, about 6. We got a forward peg of about 2, so kind of tell you on a peg basis, a little overvalued today. Grams valuation, $41.73 per share, and they do not offer a dividend. We do not get to include a dividend discount model there. Discounted cash flow. Analysts have a growth rate on free cash flow of 40%. I cut that down a bit to 30%. That still gives them a DCF price per share of about $90.24. And then to Rule 72, we have two sources of EPS growth rate for about 18.6%. Get to then double our current EPS about 2.5 times. Gives us a future EPS of about 11. And with that, fair value is $102.33. So to our final valuation here, currently Monster's trading at $50 per share. Our fair market value is $63.63, a 30% margin of safety on this one. If you were to buy it at a 30% margin of safety, would be about $44 per share. Something like this, more stable business. I think you could probably get away with a 20% margin of safety. So you're looking at about $48 per share there, something around that range. Analysts do have a price target of $59 per share on this one as well. Over to the stock chart. We're on a weekly chart here. We zoom out and kind of see this chart has kind of been intact since about 2020. Not a super long uptrend here, but I would go back even further. We can see this up. It has been in a long-term uptrend. You can go back quite a ways, all the way back to 2012. Has been in an uptrend since. And we come over here, zoom in a little bit, and look at this purple line. Every time we hit this purple line, which would be the third time as of lately, as of currently, really, we bounced off. And every time we come to this line, we bounce off, rip up higher, bounced off, rip up higher. So obviously this is only the third bounce off this line, but it does appear to be intact still. And our fair market valuation supports this thesis as well, because we're trading at about $50 per share. We know based on what we just went through, we're sitting about $63 per share for a fair market value, which is about the top end of this range. And we're currently trading at the bottom end of the channel. So I think honestly, this could be a decent buying opportunity on Monster. Also, look at 52-week lows. We're $47 on 52-week lows. We're not far from that. We're $3 away, and 52-week highs, $61 per share. So obviously, we've reached new 52-week lows in the most recent past couple weeks, and we could potentially start seeing our way back up to the top end of this channel. But that is it for Monster. If you found value in this video, drop a like, subscribe, and comment. We'll be back later with another stock analysis video.